Yeah, good morning to you, Carl. The United States and the European Union are releasing a joint statement this morning laying out more specifics around their trade agreement that was announced earlier this summer. A senior administration official briefing reporters last night called this a positive step forward, and he said the administration's goal here is to use trade agreements like this one to layer the World Trade Organization and make that international body and some others less relevant. Now, the statement says the European Union intends to eliminate tariffs on all U.S. industrial goods and to provide preferential market access for a wide range of U.S. seafood and agricultural goods. And in it, the United States commits to apply the higher of either the U.S. most favored nation tariff rate or a tariff rate of 15% on goods from the European Union. Now, one key point of contention here has been the auto industry. In the statement, the U.S. says it will reduce tariffs on European automobiles, but only after the EU formally introduces the necessary legislative proposal to enact tariff reductions itself. So it'll wait for that. A senior administration official says the hope is that process will only take weeks. We'll see. The statement also codifies that the EU intends to procure U.S. liquefied natural gas, oil, and nuclear energy products with an expected value of $750 billion through 2028, and it intends to purchase at least $40 billion worth of U.S. AI chips for its computing centers. Now, on another key note on pharmaceuticals from the EU, the agreement states that the tariff will not exceed 15%. Now, that's something that investors will be watching, as Trump has told CNBC that rates on imported pharma products could eventually be as high as 250%. So this would be much less than that. So a win for the European side on that point, guys. Back over to you.
Eamon, when we first got word of the deal, there was this notion that EU firms would invest some $600 billion in U.S. sectors by 2028. Any language this morning as to how the EU would sort of enforce that investment from the private sector over there?
Yeah, there is language in this statement around that, and it's sort of broadly put. It says in the context of the trade relationship between the two countries, they do billions of dollars, and EU firms are expected to make those purchases up to $600 billion. A senior administration official talking to reporters last night said, what the U.S. side is going to do is just monitor that and make sure that that happens. But the language there, in the statement, you can look at it yourself, maybe a little bit squishy in terms of just this expectation that those purchases will happen. U.S. officials have said that they're not that worried about it, given the size of the trade relationship between the two economies. That amount of purchases is expected to happen, sort of in due course.
So that's what I mean, like Siemens here, for example, just spending a lot of money to build a new plant or something along those lines would count. Eamon, do we kind of know what fits in?
We don't know. There's some language in there around guiding toward specific sectors. A senior administration official ticked off a couple of the sectors on a call last night. But yeah, I mean, these are individual companies inside the EU. That's not a state-run economy, as an official put it last night. So the EU can't direct companies to spend money. So the EU can't really force this to happen. All the U.S. can do is monitor it and keep their fingers crossed. And if there's any significant problem, they said they'll revisit it with the EU side.
So on pharma, I mean, this was a very close watch one because a lot of generic drugs are made in Ireland. A lot of drugs are shipped from Europe to the United States. 15% is maximum tariff. I guess in Ireland they're welcoming the clarity and saying, I guess it could have been worse. But that's still an elevated tariff rate for drugs coming in here.
It's absolutely an elevated tariff rate beyond what we had, say last year. But I think, if you're the Europeans, you look at this and you say, well, it could have been a lot worse. And that is, President Trump's negotiating style. He puts these threats out there that are enormous and sort of terrifying for people and really rattles the cage. And that gets the attention of the trading partner. And then, they feel a little bit relieved when they get down to only 15%. But if you had said 2-3 years ago there were going to be 15% tariffs, that would have been horrifying to people on the merits.
Eamon, thank you.
You bet.
Eamon Javers outside the White House.